Hello and welcome to the Morningstar series Ask the Expert. I'm Emma Wall and I'm joined today by Jose Garcia Zarate to talk about passive funds. Hello, Jose.
Hello.
So I've been writing about investing for about a decade, and when I first came into this industry, there wasn't much talk about passive funds. No one really in the retail space used them that much. It was much more about blending actively managed funds. However, now most people within their portfolio have at least one or two ETFs or trackers. So when were passive funds made available to retail investors?
Passive funds have been in the marketplace for decades, but I take your point about the increased popularity over the past decade, and I think that's because of the arrival of exchange-traded funds, really, to the marketplace. What ETFs have brought to the marketplace, apart from a very aggressive low-cost strategy, is a very straightforward corporate attitude from the providers that they were going to offer all sorts of exposures so that investors would be able to build entire portfolios using ETFs if they so wish.
And as well as this fantastic range of ETFs available to people, the low cost and the fact that they're real-time priced, which makes them very easy to trade, there was, of course, a massive macro event, which was that we had the global recession. Yeah. A lot of active fund managers failed to deliver to investors, and they thought, actually, you know what, I'd rather track the market.
That was perhaps a tipping point, but actually you don't have to go that far back. I mean, you just have to look back at 2014 bull market, and most of the active managers actually underperformed. I mean, it just goes to show the importance of actually choosing the right manager and how difficult it is to actually find him or her. And when you're faced with that predicament, really, you might as well just go and say, well, you know, why don't just do a low-cost tracking strategy, because at the end of the day, in the long term, I'm highly likely to be better off, really.
I'm going back to your point about choice. We've had tracker funds available for quite some time, but they were quite restricted in the assets that they gave you exposure to, whereas ETFs, I mean, equities across the globe, right down to some sort of difficult to reach frontier markets. Gold, extremely popular, especially during the recession, but also fixed income. That's been quite a revolution, hasn't it?
Well, fixed income has been a bit of a revolution for ETFs. I mean, fixed income, you have to realize that it's a massive market. I mean, it's much bigger than equities in some cases. But when you think about it, how easy it is to buy a government bond?
Not that easy.
Or a corporate bond.
Not that easy.
It's not that easy. And suddenly you get these products, ETFs, that give you that exposure, and they're very easy to operate. So they've basically, I think it's no exaggeration to say that ETFs have democratized, you know, the investing and bring, you know, asset classes that were previously out of bounds to the common investor to all of us, really. And
then looking forward, the next big thing in passive investing is strategic beta, sometimes called smart beta, which is this blend of sort of a little bit active, a little bit passive, in order to boost returns. Yeah. There's been a lot of talk about these types of strategies, a lot of media coverage, a lot of interest. But quite interestingly, the figures from the first quarter of this year, inflows across Europe, show that perhaps the rhetoric is a little bit before the reality. I think the rhetoric is justified. I mean, there is a lot of interest out there, but you're totally right. When you look at the figures for the first 4 months of the year, total net inflows into the ETF market in Europe total around, you know, 34 billion euros, of which about just 4 billion have been directed to strategic beta. To me, that basically says that whereas there's a lot of interest out there and it's properly justified because they're very interesting products, investors want to fully understand before investing. And that's actually a common sense way of going about things, if you ask me. With ETFs, as with all investing. Absolutely. Jose, thank you very much.
You're welcome.
This is Emma Wall from Morningstar. Thank you for watching.